This is Michael Douville. I spoke with Charles Nenner, one of the world's foremost cycle researcher, who's been making forecasts and researching for decades. He sent me his Dow chart, his proprietary research, and we talked about it one-on-one. So the Dow's got implications across the economy, the GDP, many industries. It's really worth your time to take a look at. If you like it, give me a big thumbs up. You're always welcome to join. Let me know what you think. Are we done with this one? Is there anything else that you'd like to talk about?
No, let's take a look at the Dow and see that we get in a dangerous period.
Yep, there it is. Oh gosh, that's a scary looking chart, isn't it?
That's a bit scary chart. You see that it goes back to the year 2000, so it hits all the. This is very long term. It's not for trading term, and you see it works pretty well. Like I told my subscribers, I think it's always going to work. If one time it doesn't work, it's possible, but you're going against the odds if you see this. So I would lighten up on the stock market because this doesn't look that great.
So they should really pay attention. You know,
Right.
you talked about this last year about the bonds. Those that paid attention saved themselves 17%, plus probably put that money into a different asset class. This looks
the problem is that you don't see why. It's same thing with the bonds. The news always comes a couple of months or half a year later. So you just have to close your eyes and say, listen, if this is what the cycle looks like, let me lighten up a little bit on stocks because the odds are against me.
Well, there's nothing wrong with taking a profit.
Well, there's something wrong because if it goes up next week and your neighbor makes a big profit, you don't feel good. So it's not so simple.
Well, but you know, if you do targets and we do some investing, you say, look, I want to make, you know, once I make 15 or 20% on it, you know, if I'm going to make 22% and take a little risk, is that extra 2 points worth me doing? And you know, when you get to be at my age, why we think, well, you know, trees don't grow to the sky, so you can't go broke taking a profit, particularly when you're looking at something that is telling you that we have turmoil coming on. So and speaking of that, if we put all these charts together, they're kind of saying we've got turmoil coming, don't they, Charles?
Yeah, I think so. Well, we have turmoil in the bond market. You don't hear much about it, but the investments all over the world in bonds are huge compared to the stocks.
Yes.
So a lot of it has been destroyed, but you don't hear anything because people think I still got 1.5% income. It's very strange. And gold is always a story when it starts moving up. And now it's quiet because everybody now forgets about gold. And that usually is when it bottoms. And this is going to be an interesting story if the cycle is correct. But that, again, this is a long-term cycle. Doesn't mean it's going to happen in a couple of days, but you're now in a very risky period.
So if we put all four of those charts together, gold being a store of value for thousands of years, so you would put money in there, and I think gold, if you can correct me, of course, gold really does really well in turmoil. It's not really an inflation hedge. It's kind of a currency hedge. It's kind of like when things get dicey, people put money in gold. Is that correct?
Well, you asked me that, and I'm as good as the next person. Like I said, I don't deal with these things. I only deal with what the cycle says, the price targets, when to go in and when to go out, and when it tops and when it bottoms. And the rest I leave up, to the historians.
Well, the narrative would be we've got gold going up, we've got volatility going up, we have interest rates going up, and it looks like we have the Dow going down. That's telling me that there's going to be some turmoil in the world, and you should really talk to your financial professional and prepare for that. See if this does transpire, and it looks like it's going to. How is that going to affect my portfolio? How's that going to affect me?
Right. But, your financial expert mostly watches reports and he doesn't see what's coming. So he doesn't know what to tell you. He probably says, I don't see anything coming. I wouldn't worry about it.
Well, we're in for the long term. That always bothers me when they say we're in for the long term. I don't have a long term.
Yeah.
So when they say I'm in for the long term, it means I'm in for a severe loss. So I'm not interested in that. Anything else on this chart, Charles, that you want to talk about?
No, it gives you just an idea in a couple of asset classes. what's possible, what's not possible, and how things are predicting the price movements, and has nothing to do with the news or whatever is going to happen in the world.
Well, they're wonderful charts. So, and this is a fairly recent chart too, because this is a long-term chart. This is in January, and we have a cycle that's going down. And you know, a lot of my clients are very, very heavily invested in stocks. Some of them are 100% invested in stocks. And of course, you lose 30 or 40% of your net worth, you don't feel very wealthy anymore. So I think that's an important chart. Are we done with these? Anything else that you want to talk about on this chart?
No.
Okay, let me just close the screen. Well, you know, so Charles, I'm going to tell you, over the years you and I have chatted, you've always given very, very timely and good advice. We often talked about getting a free look at your research, and I know you've mentioned it a couple times. It's charlesnenner.com, charlesnennerresearch.com.
Yeah, and then you see subscriptions, and there's a trial for 4 weeks for free, and then you at least take a look what is possible in analyzing markets, so you have an idea again what the professionals look at. Not all the professionals look at this, but you have to get an idea how to analyze markets.
Well, and I think that there's more than just a few charts on your research. I mean, yours is fairly in depth, and
yeah.
I mean, you've sent me some of them. I always am remarkable at this. So Charles Nenner Research, they go on online, and there'll be a section there that they can get 4 weeks free
trial.
research.
I think it's 4 weeks, yeah.
And then they can decide if this is something that they're interested
in.
in.
If they make money with it, why not? And if not, that's fine. Then it's interesting to see.
Well, just getting into one of these, if they just got into gold and had a huge move on that, and conversely, if they just would have listened last October, getting out of and reducing their exposure to bonds, look how much money they would have saved in their portfolios, and all that angst. A lot of people don't sleep well at night when they're losing money in the market. It really affects their lives, particularly my age. This is really sacred money that they're dealing with. It's awful when they start seeing, a 17% loss that's a pretty doggone significant drop.
Yeah, but the problem is you won't get it back anymore.
You can't get it back. No, that's right. Yeah, at my age, we're not going to get it back. So we have to be very, very careful.
Stocks might rally in a couple of years, but bonds that will take years and years and years until the interest rates will go that low again.
And as you said before, the bond market's 10 times the size of the stock market.
Right.
And really a long cycle. So this is something you really need to pay attention to. So you've done really well for us. We've gone out and got and put long-term financing on a lot of our free and clear properties. We picked up 30-year mortgages in the 3% range. It was just, it's like, wow, this is just amazing stuff. So we're really, really pleased with it. Well, Charles, is there anything else that you'd like to discuss? We're getting close to the end of the interview. I know you and I are on wildly different time zones, and I know I've got you up, and I appreciate the fact that we're talking to you. And I think we're about as far away as we possibly can be in the world. Right. And I want to thank you so very, very much for coming on with us today. I really appreciate your advice has been invaluable. I'll give you the last words if you like. Is there anything that you'd like to finish this with?
No, I said we're sitting here in Dubai, setting up a firm, and it's a great place. I advise everybody to come over here and take a look. It's really great over here. You wouldn't expect it, but it's really great. People are nice, very efficient. Everything is very, very outstanding.
So Dubai. Well, we'd love to come visit, and I think the world is finally starting to open up, and I think we're ready to go. We're here in Arizona. Of course, we've been reasonably open up. I saw, in the baseball games, I saw in Texas that they had baseball and people have been locked down, and they had like 55,000 people at the stadium. They were just like so happy that they get out and get stuff done. So as the world goes, things are going to get better, hopefully. Well, Charles, thank you.
If you don't come to Dubai, if you see the cycle low in gold, Dubai.
Okay. Thank you very much, Charles. My very, very best to you. Bye-bye now. Well, that was a pretty scary chart. It means that the Dow is not supported by cycles, and maybe it's time for you to lighten up. Now, always talk to your financial advisor. It's got implications for the economy. Might want to get conservative. We're here in Phoenix. You're welcome to call us. We're in the real estate business, and we're very, very conservative. We're a different asset class to the stock market and the Dows. We're not correlated very, very well. We do passive income. If that will help you, give us a call. You can reach me here at michael@michaeldouville.com. I'd love your business. We'd be more than happy to talk to you. If you like my videos, give me a thumbs up. My best. Bye-bye.